Okay, hello guys. As promised, I will do a open webinar videos for everybody to see and to learn my trading style. Basically, what I'm gonna do is just go over a few pairs to show some analysis and try to explain what I'm looking at when I trade. Okay, so first of all, you probably know me from my Instagram channel. It was FX Capital. Now I'm market analyst. Basically, I share all of the analysis, more or less everything, on my Instagram and also my Telegram channel. So what I'm trying to do here right now is to give you some insight as to what to look for or to be careful at, because I know that a lot of you are struggling as a trader. A lot of you want to succeed in the game, and I'm just trying to give you what I was looking for when I first started. So right now I will just start with the EURUSD pair. Now, if we go up to the monthly, you will see here I have some lines plotted up. And to explain first, these lines, these horizontal lines, are my key levels, key reaction levels. This is just basic support and resistance on a higher time frame. Now, if we look at the pair on the monthly chart, we can see a downtrend, like a descending channel. And right now we are at the trend line, at the downtrend line, currently testing it. And we also have a confluence with the pivot trend line support and some key levels. Now, if we look closely here at the month of January, I believe it was. No, it was February. If we look closely at this candle, you can see how it closed down. There's practically no wick. So that indicates basically that the next candle should be bullish, should be bearish, sorry, but the candle was bullish, but it didn't quite engulf. So basically it just acted like a retest to go down. And now we can see that this month in April, we completely engulfed last month's candle. So overall, I believe that May and maybe also June, or let's say for the next few months, we will see some bearish moves here. Now, for all of you that already follow me for some time, you already know that I'm already in the trade. I hold it for approximately 2 or 3 weeks already. I have it, my entry point is around here, 1.24, 1.239, around here. So what is it that we saw in the last couple of months here on EURUSD? We saw a whole lot of ranging around this key level, right? So basically, to explain why we range so much here, we have to look at some fundamentals. If we look at the inflation rate, you can see that the inflation rate right now is quite high. It's at 2.4%. And what the Fed is trying to do is to keep the inflation rate below but close to 2%. So if inflation rate gets too high, then they have to start rising the interest rates. And you see, if we had a decade of low interest rates and then suddenly interest rates start to rise, then of course that will create some panic. That's for example, that is the reason why the stock market crashed in January. So we saw rising inflation and we saw rising interest rates. Interest rates are very good for the dollar, so they make it strong. And inflation is very bad for the dollar. If we have both rising, then we can see only consolidation. So that's what happened here. Now that we break down is because that inflation it's not that critical yet, but interest rates are still rising and are still set to go higher for a few more times, I believe. So that is the fundamental of why we are looking for short positions on the dollar, on the euro dollar. Sorry. Okay, now let's go check it a little bit. So here we have a nice leg down. If we measure it, we can see that we have a nice confluence with our key reaction level with the 70.5% Fibonacci retracement. This is my OTE. I know that's not a default setting. That's what I use. That's what I learned from ICT. And it's very, very sustainable in trading pullbacks. Whoops. So, so what am I looking right now here? I'm just more or less I'm just waiting for pullback. It's not a rocket science. It's just simple game of patience. That's how I would call it. So if you're waiting for the pullback, I believe the entry would be here. Stops just above the highs and target down here. Yes, it's quite a huge trade. Let me explain again why I believe that the target is down there. So every time when I trade, I always look for more confluences for my entry point and my exit point. For here, I already explained the trend lines and the key reaction levels, but I forgot to show you the Fibonacci tool. So basically, we also had a 62% retracement Fibonacci, almost. So, but it's close enough. So we have a quite a few confluences of going short here. Now, if you measure that move, you can see that we also have quite a few confluences to go long here, or let's say for our target, we have the 62% retracement, which is good because I believe some reaction will be here. We have a pivot trend line, and we also have a very strong key level, as I call it. That's why I believe that the target is around 1.12. Okay, so that's what I see in the EURUSD pair. As you can see, that's not a rocket science. It's just simple use of different kind of confluences and just look for it. What will happen will happen. So the next thing, very important, you have to use your risk management. If you don't use risk management, then it just doesn't make sense. I can lose. I use 1% of my account per trade, per setup. So, and I always go for around 2 or 3 risk reward. So basically, if I risk 1%, I go for 2 or 3% of reward. So if I get stopped out, if I'm wrong, I don't care. I had a solid setup. It doesn't always work out. That's the trading game. Sometimes you win, sometimes you lose. But if I lose, I don't really care because I stick to my risk management. So that's the first thing here. Next pair I want to show you is, I believe, GJ. One second. Yes, GJ. Here we also have a quite something interesting. Okay. As explained earlier, the horizontal line is a very strong key level. We had a uptrend, a macro uptrend, and we have broken the trend right now. We came back to a retest with a confluence of Fibonacci retracement, as you can see, 70.5 very nicely, with the 200 EMA, the only EMA and the only indicator that I use. Retest of the trend line, and as mentioned before, strong key level. Yes, actually, I was aiming for this entry here, for this pair, but I somehow missed it. I don't know. This is the weekly chart. We also then saw the engulfed candle, which is also a very huge indication of price action to reverse. Now, if we go down to the daily, we have again a trend line breakout. And if we look for it again, a strong key level with the 70.5% retracement. Now, don't get me wrong, this is a very, very strong retracement. Sometimes pairs or price will turn earlier at 50%, at 38%, or at 62. Okay, 62 is already good. But at 50%, for example, and if it turns there, I don't chase the price. My analysis was up to 70.5. If it's not there, if it reverses earlier, that's okay, that's on me. I will look for another entry, but I won't chase the price. Because if you chase the price, then you may meddle with your risk. And that's then not good. Okay, so I have already shown you my my initial entry here. I believe again for a retest of the trend line, retest of the key level, and the Fibonacci retracement. Very solid entry. Now the thing is, if you have a very solid entry that you can back up, that you have solid arguments as to why that should happen, even if you're wrong and you lose, you say, okay, market manipulation stopped me out, no problem. I had a very solid setup, but it just didn't work out, so it's no problem. If you chase the price, if you're just trading with your gut feeling and you get stopped out, then you get mad. You want to revenge trade, and that's when the losses happen. As I believe most of you already experience it, and as I have experienced it multiple times, I probably made every mistake possible twice just to be sure. Now again, as to target, see, I measured the initial move that was very solid, and I go for either the first to either a double bottom here, but I believe this will be then now a downtrend. So I go for the first 0.27 extension. This is for me very good of a target point. So I'm looking for this. Now again, if we go to see the setup here, what will this bring us? Stops just above the high, around 100 pips. Target, for example, well, you can see for yourself, 9% income. That's not a bad thing, right? For one trade. And you just set it, you forget about it, and just leave it. It will probably take some time, few weeks, few months maybe, but that's what swing trading is all about. So that's the second thing I wanted to show you. And one more, I believe Aussie. I will show you Aussie. Now, if you check again the monthly chart, we can see that we have a very trending channel. Right now, we are retesting the ascending trend line. The month still not closed, so basically we're still waiting how this candle will close. But what's very interesting here is that we have a engulfing daily bar here at the strong support zone. So I believe that once you see this pattern, the next candle should also be bullish, right? So I believe that we will see some bullish price action here. But the thing, what's to really be aware here, you can again see a very nice confluence here with the reaction level, the Fibonacci retracement, and the 200 EMA. So one possible scenario, a retest here, and then go down. Now, even here, it can then retest and go up. So basically, what we're trying to do is we're trying to adapt to what the market is showing us. We are not trying to force the market. We are not moving the market. We're just trying to follow it and to look at the clues of what will happen. Now, as you may see, I don't use any indicators except for the 200 EMA. I don't use any MACD. I don't use any RSI or any I don't know, moving average crosses, stuff like that. I don't believe in that, because I believe that once that kind of indicator shows you a move, you already missed half of the move. So I always go for a pip entry and maybe go for the high or the low, and also look for confluences just to be sure, to be safe. I like it when fundamentals are backing me up. And then I just leave it, as I'm doing right now with the euro dollar. I believe I still have some months, quite a few months of bearish movement here. And yes, this is it. This was my first video in a series of videos. I will try to upload it weekly. I will try to help you guys. If you have any questions, please leave a comment below. Message me, DM me on Instagram, whatever you want. Please give me some feedback. I'm here to serve you, to help you, just because I'm very passionate about this game. I love it. I love trading, and I know how hard it was for me when I first started, and I just want to help. Okay, so thank you. Bye.